Silver prices moved higher on Friday, extending their upward momentum and reinforcing a steady trend that has been building since the beginning of the year. According to FX Street data, silver, traded under the symbol XAG or USD, rose to $77.91 per troy ounce, marking a 1.29% increase from Thursday's closing price of $76.92. The latest move brings silver's year-to-date gain to 9.60%, positioning the metal among the stronger performers in the precious metals market so far this year. On a smaller unit basis, silver is currently priced at approximately $2.50 per gram, reflecting continued demand across both investment and industrial segments. Market participants describe the advance as measured and orderly, suggesting the move is being driven by broader economic conditions rather than short-term speculative activity. Unlike periods when silver has experienced sharp price spikes, the current advance has been gradual, with prices holding above recent support levels while continuing to edge higher. Analysts note that this type of price behavior is often associated with steady accumulation by longer-term investors, rather than momentum-driven trading. Trading activity remains balanced, with no clear signs of excessive leverage or heightened retail participation entering the market at this stage. Silver Excesto's nearly 10% gain since the start of the year has drawn renewed attention from analysts and investors alike. Historically, silver has tended to lag gold during the early stages of precious metals rallies, often gaining momentum later once broader macroeconomic trends become clearer. This early year strength suggests silver may be responding to deeper structural forces rather than temporary market noise. Inflation continues to play a central role in supporting silver prices. While headline inflation data in several economies has shown signs of moderation, underlying cost pressures remain persistent. Housing, energy, food, and healthcare costs continue to rise, keeping concerns about purchasing power firmly in focus for investors. For longer-term market participants, silver has historically served as a hedge against inflation, particularly during periods when inflation proves more durable than initially expected. Unlike assets tied directly to currency systems, silver's value is rooted in physical scarcity and real-world utility, which has helped sustain investor interest. Uncertainty surrounding global monetary policy has also contributed to silver's appeal. Central banks have maintained restrictive policy stances to control inflation, but questions remain about how long elevated interest rates can be sustained without slowing economic growth. Rising government debt levels and pressure on financial systems have added to investor caution. During periods of monetary uncertainty, precious metals often attract renewed interest as assets less dependent on policy decisions or financial intermediaries. While silver does not generate yield, its lack of counterparty risk remains a key consideration for investors seeking stability. Silver's relationship with the US dollar continues to play an important role in price movements. Because silver is priced in dollars, any weakness in the currency tends to support higher prices by making the metal more affordable for international buyers. Even when the dollar remains relatively stable, inflation-adjusted returns on cash holdings often remain unattractive, indirectly supporting demand for precious metals. Beyond its role as an investment asset, silver's industrial importance continues to provide long-term structural support. Silver is widely used in solar panel manufacturing, electronics and semiconductors, electric vehicles, and medical and chemical applications. As global investment in renewable energy and advanced technologies continues to expand, demand for silver from industrial sectors remains firm. Analysts emphasize that much of this industrial demand is structural rather than cyclical, meaning it is tied to long-term economic and technological trends rather than short-term fluctuations. This dual role, as both a monetary and industrial metal, continues to distinguish silver from other precious metals. On the supply side, silver production remains constrained. A significant portion of global silver output is produced as a byproduct of mining other metals such as copper and zinc. This limits the industry's ability to rapidly increase supply in response to rising prices. At the same time, rising production costs, stricter environmental regulations, and geopolitical risks in key mining regions continue to restrict new output. Market observers note that these structural constraints could amplify price movements if demand continues to strengthen. While gold often dominates precious metals headlines, silver's recent performance has renewed interest among investors who follow the sector closely. Silver typically experiences greater volatility than gold due to its smaller market size and industrial exposure. Historically, during sustained precious metals rallies, silver has often delivered stronger percentage gains once momentum becomes established. Current price behavior suggests silver may still be in a positioning phase rather than a late-stage rally. Importantly, investor sentiment remains disciplined. There has been no surge in speculative trading or excessive leverage, and market indicators point towards steady participation by longer-term investors rather than short-term traders. Despite the positive trend, analysts caution that silver remains prone to short-term volatility. Pullbacks and periods of consolidation are common in silver markets and do not necessarily indicate a change in direction. Market participants continue to monitor key technical levels to assess whether silver can maintain its upward structure in the weeks ahead. In summary, silver's rise to $77.91 per troy ounce, combined with a 1.29% daily gain and a 9.60% increase so far this year, reflects steady confidence in the metal's underlying fundamentals. Rather than a speculative surge, the move appears to confirm ongoing trends driven by inflation concerns, industrial demand, and constrained supply. As economic uncertainty persists and inflation pressures remain unresolved, silver continues to hold its position as a closely watched asset within global financial markets.